we raised less than $3 million. And I think that I stopped counting, honestly, but I'm pretty sure that we passed like 1,000 kind of no's, okay, from VCs, from investors. And I had one thesis: as long as I have clients that are willing to pay for the services, eventually we will raise funds. If you'll ask my kids, I'm a mother of four. I mean, Papaya is their older kind of, sister. Each one of them, Papaya was probably kind of the second or third one. If I'm not happy with something, if I'm upset, I'm disappointed from someone, I want to be able to tell them directly, because this is how you get this off your chest.
Eynat, welcome to Fintech Leaders. I'm delighted that we are recording this. How's it going today?
Going very well, thank you. Thanks for having me here.
I wanted to start right off the bat about your experience building Papaya. But what I'm interested in is, prior to Papaya, you had built two services businesses, very different, not tech forward, not VC backed, more importantly. So what's something that absolutely, you didn't like when you started in tech, and then how did you get used to the whole experience?
First, I'm still getting used. So, there are still a lot of different lessons, honestly. And I think that's the main thing for me, that it took me time to adjust, is on services. Every day you end the day and you execute something, okay? Every day is eventually a day that you create a real value that eventually, needs to sum up to revenues, because otherwise it's not going to make happen. I mean, it's not going to make any sense. In tech, the way that you're looking on things is, how do you eventually kind of work on things, create an aggregated value for the long run, and then doing things on a larger scale. And it's a very, very big mindset, okay? It's a very big change in the way that you're looking on things, on the way that you're designing things, on the way that you're really planning things. Because honestly, in a way, it's much easier to measure the day-to-day kind of value, right? At the end of the day, I mean, let's take it to the very kind of easy kind of sample. I count the cash that I have in hand, and I know that this is what I made today, right? I mean, in tech, this is not how it works. You have a roadmap, you have releases, and then you need to assure that you are converting it to much bigger kind of checks. And I just think that getting into this mindset and understand that you're building for scale, you're building for growth, therefore you need to be much more planned. But having said that, always keeping the framework of time frame, because it's very easy to get kind of, time slip away, was very important for me to find the right way, of how to bring my kind of desire of doing everything here and now and seeing the immediate outcome, to the fact that we want to build things bigger and better for the long run, but also keeping a very, very clear time frame.
One of the aspects that comes with most people building a tech company, not everyone, is fundraising, and you're no stranger to it. Maybe can you share some of your maybe positive experience with fundraising, and maybe so not so positive that you had at the beginning?
Yeah, sure. So, I mean, I'm not sure that people know that, but generally speaking, Papaya grew on quite bizarre way. On the first 3 years, we raised less than $3 million. And I think that I stopped counting, honestly, but I'm pretty sure that we passed like 1,000 kind of no's, okay, from VCs, from investors, and so on. And some of them kind of refused us multiple times. And I had one thesis: as long as I have clients that are willing to pay for the services, eventually we will raise funds. Okay. And we heard tons of things. When we raised, by the way, Series A, eventually, we were already running $7 million in annual revenue. So that was a lot. I didn't even realize that it was a lot for kind of, at the stage that we were, because for me, it was all about kind of building and showing and proving the investors that what we are building actually has value. And few things that I've learned over the course of those years. First is that I think that when we told the story to investors at the beginning, they understood and it makes sense to them. But then they went and asked the CEOs of their portfolio companies, do you have any payroll problem? And they said, no, everything is great. I don't think we need anything, because honestly, CEO doesn't know what's going on behind the scenes of payroll. And I think we should have guided them directly to the CFOs. I think we should have told them, don't ask your CEO, because your CEO will tell you that they don't have problem. Go to the CFO, ask him very, very clearly, how how long does it spend on it? What's the visibility and so on? So I think even kind of guiding them to the right stakeholders was something that we could have done and kind of get the better answers from them and so on, and kind of guide them to get better visibility on the problem and so on very early days. The second thing that I would say is that no doesn't mean that the investor is your enemy. Okay, I have a lot of investors that are actually we are staying in very good contact and so on. That, as I said, kind of said no to me multiple times, and the majority of them were kind enough also to give me feedback. Okay, why they refused. Okay, sometimes I didn't agree with the feedback. I thought that they don't understand the domain good enough, or their thesis is not correct. But many of their feedbacks actually helped me to kind of to be ready and prepared and to build better and even meet them like 6 months down the road and kind of be stronger in my position or kind of show them that we've made improvement. So no is not a definitive, and don't take it personally. I think that this is the worst thing that founders can do. Kind of somebody is saying no to them, they take it very personally and so on. That's, I mean, for me, no from investor is like no from a client. It's a challenge. I need to convert them. I need to explain them why this is actually something that they really need to participate or to buy or to invest in. So, I mean, that's I think a very much healthier approach, and it's build better relationship with investors. Even the one that did not invest will be very good ambassadors for your future if you'll remain kind of in good kind of connections with them.
So I like your first principles approach, where you go to the very basic. It's like, if I have customers and I'm growing, investors will get interested. By the time you reach the Series A, sounds like you had learned a lot. You had gone through hundreds, if not close to 1,000 no's. At that point, what was it about your relationship with your investors that allowed you to secure a strong Series A?
I think at that point of time, what they realize is that we have great client base, we have great kind of client retention, and obviously kind of great upsells as well. So all of the metrics were actually very, very well. But I think for me, what I learned is that when I step into their room in order to secure funds, I need to speak in their language. Okay. So in a way, they are not here to buy my product. I mean, they are here to understand why customers are buying my products and what are the revenues metrics eventually and the financial kind of metrics that they are looking for. And I think, as someone that's building a product, as founders, generally, you're always selling your product. This is what you're doing. When you are stepping into a room with investors, you're not selling the product, you're selling the company. You're selling the future promise of this company in the financial market and so on. And I think this is a bit different dialogue. It took me a while to understand this. And then when we kind of stepped in and raised our Series A, generally speaking, we ended up raising twice the amount that we wanted to raise. But the interesting thing is, I think that we could, at the time, really promised and believe ourselves, but also assure that our investors believe that we are here to build the very kind of big picture and a very big company for the long run. And I think this is the thing, because many cases, and when I speak currently with early stage founders, I always ask them, okay, you want to raise currently $5 million, but what's the end game of this company? Are you going to sell it? Are you going to go public and so on? And if they don't have an answer, it means that they don't really think through the process, right? I mean, they see the $5 million that they want to have in the bank currently, and it seems like they're the goal, and but so on. But the investor sees this $5 million, and in his mind, he needs to understand, can those $5 million become 50 or $500 million if he's super lucky and so on? And if they are not aligned here on, like, how do I convert these $5 million to a very, very big promise, this will not happen. And I think founders on early stage, they don't understand this. This is not the way that they step into the room and sell the dream.
Staying in the early stages of Papaya, what does it mean to be global, to build a global company from day one?
It means a lot of hard work, because the decision from day one was that if we cannot support, we started with 80 countries, we grew very quickly to 160 countries, we cannot support a product on 80 countries, we are not going live, okay? So it means that you need to have a lot of localization, you need to have a lot of knowledge, you need to understand how you are consolidating the experience in so many different kind of locations and in so many different kind of small nuance. And this is very strong in our DNA, even today, definitely on the payment side. When we are launching something on the payment side, it's almost easier, or I mean, generally speaking, it's always easier to start with one market to grow from there. And from day one, even we in payment, we said, no, we want to assure that we hold multiple licenses. We can work on multiple kind of region and geo from day one, because if we cannot deliver the global experience for our clients, this is going to start breaking our eventually kind of our internal kind of go to market and so on. And it's not going to be great for us. So you need to be very consistent, and you need to be also assured that you can deliver here. And sometimes it's taking more time to deliver, and you need to kind of build, I mean, along side by side, like a bigger picture. But I think eventually, obviously, it ends up to a better value to the client.
I guess it also means that you probably have more partners than the average fintech company.
That's correct. And much more complexity, by the way. More partners, more currencies, more entities, a very, very complicated back-end operation, and so on. Yes, for sure.
Staying on payments, can you talk a little bit more about your acquisition of Azimo and how have you kind of developed your payment rails?
Yes. So we started from the employment workforce payroll side. This is what we wanted to solve on the global kind of aspect. But a few years to this kind of journey, we realized that the last mile of payment is super important and is super critical. And actually, if we're going to solve it well, this is much, much bigger kind of thing that we can bring to the market than just being a payroll or employment company for the market. Because generally speaking, I can do phenomenally well in processing your data, payroll, assuring that everything is correct. But if the money is not in the bank at the end of the day, I mean, you're not happy. The company is not happy. No one is happy actually, because you cannot buy anything with your payslip, so it's not going to help. And what the other thing that we realize is that all the payment companies across the globe and all of the banks that we spoke with across the globe, they only guarantee when the money is going to leave their bank account or their kind of eventually their rails. They will never take liability on when the money is going to land on the other side. And local to local is easier because you can track this. It's majority of the cases, it's almost kind of same day to day or very, very kind of immediate transactions. But on the global side, I mean, the average time to send funds from a country to another is still 18 hours. And it's crazy because within these 18 hours, the money is exchanging hands and you lose track and you don't have any SLA when it's going to land in the bank account. And when we started with payment, we said we want to assure that we are looking on our mission statement from the end, the last mile. Okay. We want to know when we are delivering the funds. How can we commit to deliver those funds on a very specific date? And then we are going to build this on the backwards for the client. So they know that we are committed to pay salaries on time. That, by the way, it's even going, we are breaking it into smaller nuance because we are also committed that the salary will be written as salary in the bank, because in many cases it has impact on your ability to take mortgage, on your life insurance cost, and so on. And we are also taking the nuance of paying your social security, your taxes, and so on with everything. And those are really, really complicated headaches that we took over ourselves to solve on the country and country level, and ensuring that we can really get those transactions correctly within any governmental system, which is really a big headache that we are solving. So for us, when we brought payment in, it was let's bring payment infrastructures and design it to solve the global workforce transactions pain. Because when you're paying your vendors, I mean, you can give him a proof of payment. Nobody will eventually kind of chase you if the money does not arrive in 2 or 3 days. Okay, they're gonna wait for the fifth and the sixth day. Everything is okay. I mean, everyone is happy. But if someone is not getting paid on the last day of the month, on the 30th, and this is a governmental kind of requirements, you are, I mean, it's escalated directly to the CEO. It's a breach of the trust that you have in the organization. And this is kind of the mission that we're looking, and it's much bigger than just being a payment company or being a workforce company. It's actually the combination of both of them that really makes it kind of, for us, very unique.
I think you mentioned when we spoke in the past that you're covering, is it about 180 countries?
Yes.
I'm curious, what are some of the trends that you're seeing across markets? What are some of the most active ones on the platform? Love to hear your take.
Yeah. So I always said that if somebody wants to understand kind of the world kind of geopolitics, they need to look on employment trends, because this is really kind of goes side by side to that. So, for example, I mean, for I think 3 or 4 years now, we really see how the strategy and the vision of the UAE and all of the kind of the Gulf countries are starting to really kind of take place. You see more and more tractions going there. You see more and more digital nomads and people that are actually kind of residents of the UAE and the Emirates in order and are being employed from there. So I mean the traction that this region is kind of currently taking is quite big. We see Latin America growing very interestingly and taking more and more kind of positions from traditional, I would say, North American kind of markets, replacing a lot of roles that are harder or more expensive to find in the US and in Canada. And this is a very interesting rise. And we see specific countries, I mean, India will always be a very big base. But for example, Singapore enforced a lot of changes on their regulation, on the workforce regulation in the past few years. So we see that generally speaking, it's a place that is becoming harder to be a kind of central APAC hub, and people are starting to shift to Australia. People are starting to shift to Hong Kong. So it always goes side by side by obviously governmental incentives. Like Portugal set great incentives a few years ago. They started being very aggressive on pursuing about tech kind of entrepreneurs, companies, and individuals. And you see the growth. By the way, you also see kind of the growth and the steady growth in salaries. So the average kind of salary in Portugal almost doubled itself in the last 2 years on the tech side. So those trends are very interesting. Obviously, I mean, China was on a huge kind of rise pre-COVID, post-COVID. It's not great kind. And you see less and less companies, sorry, that are trying to expand their business into China and so on. But I think, and we see the rise of Africa, which I think will be interesting in the next few years. Definitely in tech, I think Africa was a kind of promise that was never kind of delivering the expectation for the past few years. But now, with everything that happens on AI, we see more and more individuals in Africa that can actually serve global companies and so on. So we see a lot the rise of Africa, definitely on the fintech, definitely on kind of the freelancers kind of market and so on. So there are a lot of interesting trends.
Switching gears a little bit, one topic you and I have discussed in the past is about the importance of direct leadership and just direct feedback. And I know this is something that you espouse. Maybe can you share, how your direct management style, no nonsense communication, has it ever gotten you in trouble?
I mean, the short answer is yes, for sure. I mean, it's always easier not to say things than to say things, because when you say things, then you need to stand behind them, or you need to justify them, or people kind of can understand this differently than what you meant. I think the way that I choose to manage my life and my business are exactly the same, is with brutal honesty. I do believe that generally speaking, we need to be honest with each other the best way possible. It's not about being abusive or disrespectful. It's about just trying to be very, very candid with people and not telling them things just because it's the easiest path for you. Now, I think sometimes for people it's hard. Or, I mean, the hardest conversation are for me are the one that you need to tell someone that you really like them personally, but you don't think that they're good enough for this role, or that you don't think that they're executing good enough in some things. And I think, some people are very receptive and then they can learn from this. I mean, and it goes back to the feedback that I wanted to get from investors at the time. I didn't want them to tell me, you are great, but we are not going to invest. I wanted to tell me, we don't think that you are strong enough in this, this, and this. This is why we're not investing, because this is how I can improve. I don't like it, obviously, because I didn't get the money, but at least I have like tools that I can take from there and challenge myself. And I think that there is a lot of, I mean, there is a big change, but there is still kind of the majority is still trying to keep the communication level, or kind of the leadership style very vague. While I believe that honestly, every single employee in Papaya can send me an email, every single employee in Papaya can ask me if they need help with clients, or if they eventually want to consult with something that is generally speaking about kind of clients, product, and so on. They know that I'm very much involved, but also they know that I want to be involved and I want to hear them and I want to be there for helping them. Because the worst thing that I think can happen in companies when they are growing is that you have a disconnect from the field. And you always have a level of disconnecting from the field. People will not tell me everything that they will say to their crowd or to their kind of peers. But I think that when you think that the company is doing one, two, three, or your own employees are thinking that the product is doing A, B, C, but in reality, they think differently, this create a misalignment and misconnect that will harm the growth, that will harm eventually kind of the path that you are. So you need to ensure that you're investing in that. You need to ensure that people are actually embracing it. And, I mean, people knows that. I think that I'm very direct about everything that people will ask me. And by the way, I always said that this is my opinion. Doesn't mean that it's correct or it's right. And it's even doesn't mean that there is no other way that you can get to the point. But if you ask me something, I mean, be willing to hear the answer and don't just expect to get the answer that you wanna hear, because this is not how it works.
And something you mentioned before we were started recording was that if you have that direct style, you don't have to walk with this weight on your shoulders. So like, oh, I should have said something. Can you share more a little bit about that?
I think, in many cases, and it goes to life, and not necessarily kind of business, relationship, friendships, and so on. I mean, people have interactions with others and eventually they're not happy or they're upset and so on. And then instead of just being very direct about it and clean it, wipe it off the table, they're going to carry it. And then another thing's going to happen and it's going to get heavier and heavier and heavier. And from my perspective, I always say that, if I'm not happy with something, if I'm upset, I'm disappointed from someone, I want to be able to tell them directly, because this is how you get this off your chest. And it's really kind of, this is the term, right? And it's really a lift that you get off your chest. And then I think that it's just make things much easier and more transparent and generally speaking, much better in the way that people communicate with each other.
Let's talk a little bit about how you've designed the structure of the company as you've grown, and how does this design allow you to continue to grow, obviously hyper growth, but also stay efficient?
But first, I think that there is no one design that you're doing, and then you are just kind of hitting the road. Okay. I always say to everyone that basically a startup and a hypergrowth company is exactly like raising my kids because they are relatively small. So I cannot expect my 3 years, every kind of season, every summer, you're gonna go to their closet and you're gonna get their shirts from last year, and it's going to be too small because all of a sudden is huge. I mean, comparing to last year, and I can't expect this to fit, right? And it makes sense. So you know that you need to change everything. You know that you're gonna change their shoes, their shirts, and so on. This is how it works. You can't fight it, and it makes perfect sense for us. And it's the same with the company. I mean, every year in Papaya it's a completely different company. It's completely different mission and vision, and eventually kind of things that we need to achieve in our growth kind of path. And I think that generally speaking, this means that you constantly need to look on your design, your leadership. I mean, are they able to take you to the next level? Where are you kind of becoming more weak? What are the things that we are not good at and that we currently need to get much better at? Because, I mean, we are growing a scale. I think that a lot of founders eventually are great in generating ideas, in kind of running quickly to the market, in starting things. We are less great in processes, in efficiency and operational, so on. And you need to assure that you are either kind of bringing someone to do that, or you are changing everything to support the things that you are not very, very strong at. Because if you're trying to change, and you do change within this journey, okay? I constantly change, I constantly evolve, I constantly challenge myself on the things that I know that I'm not great at and how do I improve. But I also understand that I need to bring the best people that are actually have a completely different kind of character than I have, and give them the room to do things differently in order to kind of allow the company to grow. So I think that, having a very open, and it goes back to direct communication with your leadership kind of group. And, we have this phrase in the leadership group that we are in our role as long as we are good in this role. And I mean, everybody can be replaced. And I don't know if I'm going to be the CEO forever, honestly. I think that I'm still doing a decent job as a CEO, but I'm constantly looking, challenging myself and challenging my management team. Do you think that, generally speaking, somebody else can do a better role? I'm going to do tons of other things in the company. I don't have an ego. I want the company to be successful. I don't want to be the CEO of a failed company. So I'm happy not to be the CEO, and that the company will be successful if this is the right thing for the company. I think that you need to design things not emotionally, but very, very kind of practically. The fact that I was employee number one doesn't mean that I need to continue being the CEO for the whole way. Maybe yes, maybe no, but you need to look at this very, very rationally and constantly ask yourself and your peers in the leadership group, are they currently in the right position? Are we optimizing this position to what we need in order to grow?
Other than mentorship and maybe classes, have you found anything else that kind of helps you continue growing as a leader to stay on top of kind of the needs that the company requires at each point in time?
So I think everyone has his own kind of way. My way is always try to find CEOs that I respect, and I look kind of their journey, and they're probably kind of 2 to 5 years ahead on our journey, and try to get an hour or 2 hours from their time and understand what is it that I don't know yet. What is it that they do that, I don't even think about? Because everything changed when you are growing. Internal communication changed when you're a small company and everyone is in the same room. Internal communication is somebody kind of, standing up and saying, listen, everyone, I have something to tell you, and everybody listen, right? And everybody are there. Internal communication on 1,000 people company globally is completely different. You need to assure that messages are going to the right place, that are being understood and actually kind of echo to the right to all of the people on the same way. So I think that for me, what is working is really kind of learning, reading, listening to tons of podcasts about people, and hearing about things. I think that when you kind of learn to listen, okay, to others, you also understand what are the problem that they are talking about, what are the pain that they solve, and you just learn. I mean, I think that the one thing that I love about this journey, and definitely about the tech ecosystem, that people feel very comfortable to share. And it's not about everything is great, everything was so easy. I think it's much more open environment, and kind of, the culture is much more, let's share about our challenges and our pain rather than just try to hide them.
Yeah, that's also one thing I love about the tech world, that positive sum mentality. And as someone coming from, past life banking, where it's not like that, it's certainly, I much prefer the tech way. Are there any CEOs or leaders that you admire, or any companies that you admire that you can share?
Many. I think first I admire everyone that is writing or sharing very openly. Okay. So for my kind of ecosystem, definitely on Israel, I admire Wix, Monday. I think they've built phenomenal companies. I think they also kind of build phenomenal company while sharing a lot of knowledge and kind of contributing tons to the ecosystem. Fiverr, another great example. I love the Datadog story. They've been a client of Papaya from the very early days, from them being public, and seeing the growth and so on from internal. This is always a phenomenal kind of story. I definitely kind of, I currently read Amp and Up, which is a great book of Frank, and that was the CEO of ServiceNow and Snowflake until recently. And sometimes when you understand that, they were not always great company, eventually kind of he needed to build them to be great companies. You really understand things from the internal, and I think this is great. So there are a lot of great people out there, and I constantly kind of meet more and more. So I always kind of happy to learn from others.
Let's talk about a topic that I think is very interesting, and that is parenthood and entrepreneurship. You are a mother of three, and you actually have shared publicly how you were blogging while pregnant during the pandemic, right? And then how it's a tough kind of thing to share for a lot of people, right? But not for you, or maybe it was tough at the moment, but can you share more about that experience?
Yeah, so I'll correct you, because if you ask my kids, I'm a mother of four. I mean, Papaya is their older kind of, sister, and oh, brother. I mean, that's for them, I mean, each one of them, Papaya was probably kind of the second or third word they knew how to say when they were babies. So, and they always know, by the way, that Papaya gets priority, over their kind of needs in the majority of the cases. And I think that generally speaking, the parenthood side is super important. And we also spoke about definitely kind of being a female entrepreneur and kind of a mother as well. Because I think that generally speaking, this is still a topic that is, I would say, kind of open enough or not kind of transparent enough. And at least once a month, I get an ask from kind of someone that I know if I can advise a female founder that found out she's pregnant, and she doesn't know how to handle this with investors, how to handle it internally, and so on. And it's always amazed me. Okay, it's always amazed me that doesn't matter what career you hold. I mean, how powerful you can be in everything that you do. Pregnancy is always the most vulnerable place of every kind of female that I've ever met. And it's not a place that a lot of us are used to be at. And all of a sudden, we feel that this is what defining us, this is what people see. And I think I shared with you before as well that I always tell them, think about that, I mean, on a very, very rational way. Okay. I mean, first, we all chose to be founders or entrepreneur, and we all chose to be mothers or parents. And this is great. It means that we know what we are doing, right? It's not something that we just kind of somebody forced us. So it means that we believe that we can do those both things successfully, I mean, side by side. And I do think that this is the case in the majority of the cases. And I always advise them that they need to look at this in a similar way of a CEO that currently, I mean, find out that he's sick and he needs to take a long sick leave, or he's going through a personal kind of change, getting divorced or anything like this, having something with his family and so on that requires his attention. And in a way, when somebody is telling you this, you get more sympathy, and the whole organization feels much more that they need to kind of come. But when somebody's saying you I'm pregnant, you said, oh, now she's not going to be here for a period of time. And it's all, I mean, in majority of the cases, there is this level of sympathy does not exist, but it's exactly the same. I think that it's a very, very kind of an interim period. It's a short-term period, and we need to look at this. And the majority of the CEOs, female CEOs that I know, done amazing job to build everything, a minute before they gave birth and a minute after they gave birth, in order to assure that, I always say that I build the best contingency plan for myself when I'm pregnant, because I literally kind of sit down and map everything that I'm in charge of and do a contingency plan for the company. What happens if I'm not available the day after, I'm not available the week after, and so on. And I think this is very important. So, and another thing that I would say is that for me, I always try to bring my kids to be part of my career, because I think that this is how you make this work better together, and you kind of give up the regrets feelings and so on. So, when I'm Zooming with people, they know that they can come, they can say their hi, kind of get their 30 seconds of glory and go. Okay. And I think that by the fact that they feel that this is not something that is out of their side, that it's not kind of available for them, it just makes them feel part of it. And it's actually kind of a great experience. I think that this is a great opportunity. When we grew up as kids, I mean, my father never took me to work because it wasn't something that you do. You don't bring your kids to work. Currently, the way that you can bring them, engage them, even kind of explain them, I mean, I try to explain my kids what is contingent works, what is payment, what is workforce, what is payroll. And it's interesting conversation, but it's also kind of let them kind of, understand things clearer, see a bigger picture. And I think this is great experience. I think as much as we're going to make it more natural, embrace this, we'll actually kind of get much better success.
Yeah, last time we spoke, one of your kids came running and said hi.
Yeah.
Yeah.
Maybe they will still.
And why does the corporate world get pregnancy so wrong for the most part?
It's a tough question. I think it still go back to the fact that if everyone look around them, and if everybody look about their experience, at home with their kids, with their wife. I mean, the challenges that they have. I mean, it's a tough period. I mean, I think that I have 3 kids. I mean, we had a period at home that we had 3 under 4, which was very, very tough. And I think that we had a year that, honestly, I mean, sleeping more than 3 hours in a row was very nothing that never happened here. So I think that people are looking on this and kind of from their personal experience, it's tough, it's demanding. And yes, everything is correct. I'm not saying it's tough, it's demanding, but honestly, decided to be an entrepreneur, it's tough and demanding. So, I mean, actually, it's a really, really good signal from my perspective. If people can do that with kids in their background and so on, I mean, you can trust them that they will know how to handle even bigger problems. So, I mean, I think that we need to kind of look on pregnancy or parenthood from the very judgmental kind of point. There are lots of solutions currently, and honestly, I mean, women that choose to have career will always find the best way to navigate because this is their choice.
Someone told me that once you become a parent, you become a lot more efficient in your professional life.
That's for sure. That's for sure. I couldn't agree more.
So, Eynat, before I let you go, maybe share a little bit of your vision for the next decade at Papaya, or how many years you want to talk in the future?
Yeah, so I think we live in obviously a very, very interesting and transformative currently period, right? I mean, the AI, but not only the AI, the way that we are consuming services, the way that we live, the way that we think, a very big trend happens since COVID. And actually it's kind of accelerating, and it's actually shaping a very different generation. All of a sudden, people are asking themselves, where should I live? Who should I pay taxes for? Which currency I should hold? I mean, nothing is obvious, right? I mean, people are eventually kind of living in multiple currencies. People are taking decisions that are very different than just one geo or one kind of job. And I think the rise of freelancers, contingent workforce, gig economy, global kind of mindset is really kind of transformative in the world currently. We obviously are looking on that from the infrastructures, because from one hand, people want to be more global, right? People want to be digital nomad. People want to work from wherever they want. But I mean, compliance, regulation, and everything else is actually going against them. If even we're looking currently on what happens in the US with the tariffs, and kind of it's eventually kind of a global war, because you are saying, I don't want things that will be eventually kind of consumed in America to be built outside of America. I want them here, because otherwise they're going to be more expensive. And it's very, very interesting. In our world, we are always looking about how we are taking the individual and the global kind of individual, and his relation with the work with the organization, and creating this relationship seamless, right? Because it's still complicated. I mean, compliance are complicated, regulations are complicated, paying people is complicated. And making it very, very seamless, looking on this on a global economy, keeping compliance as the first instrument, the first layer, but building on top of compliance the best experience that we can on the global side. And I think it's going to be very, very, very interesting generation in this aspect, that people all of a sudden can, I mean, decide that they are doing things very differently from their own career. I heard Elon Musk last kind of presentation in Saudi, I think, and he said that wealth is not going to be a problem any longer. Everyone's going to have enough access to wealth because AI will allow this. This is actually a very interesting thing. I mean, if you think about it, that money is not a real problem, okay? You can have more money if you want, but I mean, the basic layer of just money will not be a real problem in the world. This is actually creating a very, very different kind of mindset and so on. So I think that the global kind of aspect is very interesting. I mean, for us, basically kind of reinventing services on the bank side, on the financial side, on just access to funds better, just access to better financial decision. This is what we are very busy at.
I've really enjoyed learning about Papaya, learning about your story. Thanks for sharing it. Really, really appreciate it.
Thank you. Enjoy the time.
The Fintech Leaders podcast is for informational purposes only and should not be considered financial or investment advice.